Good evening, everyone. I'm starting the class now. So, in the last class, we discussed about all the different items included in gross income and adjustment related to the gross income to get the adjusted gross income. So, when you get your adjusted gross income, the next step is for deduction. So, in case you can get standard deduction or itemized deduction, you can take one deduction out of this standard or itemized deduction, which is beneficial for you. So standard deduction are basically based on your filing status. So these are fixed for a particular year and depend upon the filing status. Like for single, it is $14,600 and it varies according to the filing status. And in case if you are of age 65 years or older, or if in case you are a blind, then depending upon these conditions, you can also get some additional standard deduction. So it is basically 1950 for single or head of household, depending upon conditions. So it is per condition, you can get this additional deduction. So if you are both 65 and as well as blind, then you can get the double of this amount as an additional deduction. Okay. For married filing jointly and married filing separately, 1550 is the additional deduction that you can get depending upon this condition, 65 years old or blind. And if in case if a person is both 65 as well as blind, then he can get the double of this amount. Next is who cannot claim the standard deduction. So in case if you are itemizing your deduction, then you can't take the standard deduction. You can only take one, either itemized or standard. Non-resident aliens cannot claim the standard deduction. Individual filing short year return due to accounting period change. So if someone is filing their tax return for the short year, then they can't take the standard deduction. And in case estate, trust and partnership, standard deduction is also not possible. Okay, so if someone is having a dependent, then standard deduction for dependent is this amount. Next is standard versus itemized deduction. So you can choose whichever is more beneficial for you. So if you think your itemized deduction are more as compared to standard deduction, then you can take the itemized deduction. Okay. For example, Jack's single taxpayer has a salt state sales and local taxes, state and local taxes of $5,000 and interest of $6,000 plus charity of this amount. It means total expenses he have $13,000. So for these expenses, he can get the itemized deduction of $13,000. But if we compare it to standard deduction for a single taxpayer, standard deduction is more than as compared to itemized. So it will be beneficial to take the standard deduction instead of itemized deduction. Okay. Similarly, if your itemized deductions are greater than standard, then you can take the itemized deduction. Whichever will give you more benefit, you can take that. Is it clear?
Yes.
Okay, so next is itemized deduction. So under itemized deduction, you can take the deduction for these kind of expenses. So we will discuss these expenses in detail in the next slide. So first is medical and dental expenses. So if you have any unreimbursed medical and dental expenses, then you can take the itemized deduction for these expenses. Similarly, for any state and local taxes, if you are paying, then you can get the deduction. Mortgage interest, investment interest expense, any gifts to charity, casualty and theft losses, gambling losses, and other miscellaneous deductions, which are actually suspended until 2026. So first is medical and dental expenses. So if somebody has some medical and dental expenses and that expenses are unreimbursed, like if it is reimbursed by insurance, then no problem. But if it is unreimbursed expenses, then you can claim in your form 1040 as an itemized deduction. But the limit is that these expenses can be claimed above 7.5% of AGI. Okay, so if you have any expenses in excess of these limit, then only you can get the deduction. Okay. Medical and dental expenses, basically, which are qualified expenses that only can be claimed in the form 1040. For example, if someone is having doctor fees, surgery, prescription drugs, long-term care, any prescribed drugs and medicines, any like PPND, like in, for example, in COVID-19, mask and other things like sanitizers, these were main expenses during the COVID time. Then those expenses also be claimed as an itemized deduction. Or if somebody is having any surgery, that is also a qualified expenses. And one more thing, if somebody is like uh, if somebody is taking any surgery just to improve their appearance, okay, for example, just to improve their appearance, they are uh, doing some they are taking some plastic surgery, or somebody's like involving some clubs related things, so these were not deductible. But in case, like a cancer patient is taking if a cancer patient is taking some wig, because wig is important just to improve their mental health, then these can be claimed as in medical and dental expenses. Otherwise, if somebody is like doing some surgery just to improve their appearance, then it is not deductible. And any OTC drugs, means which are which are not prescribed. Okay, so if you are taking the over the counter drugs, OTC means over the counter drugs or medicines, which are actually not prescribed, that cannot be claimed as in mental, that cannot be claimed as in medical and dental expenses. Any doubt in medical and dental expenses? Also, life insurance premium, Medicare portion of Social Security, and self-employment taxes, so that is also not deductible. Household help, if somebody is taking some household help, but in case like someone is suffering from any injury, and in that case you are doing some modification in your home, uh, then you can claim it under medical and dental expenses. Any doubt in medical and dental expenses?
No, ma'am.
ठीक है, आप एक बार बुक में से आपको ये क्वालिफाइड और नॉन क्वालिफाइड एक्सपेंसेस जरूर अच्छे से रिवाइज करना, बिकॉज it can come in exam, like if somebody is paying for this expense, if somebody is paying for like the cosmetic surgery, whether it is deductible or not, so you should know which are qualified and which are not qualified expenses. Okay, next is state and local taxes. So if you are paying some state and local taxes, so state and local taxes, it may be for income taxes or it may be for the sales tax. So there is a limitation that you can deduct up to $10,000 of these expenses as an itemized deduction in your form 1040. Okay, but there is a condition. If you are claiming the income taxes like state and local income taxes, if you are claiming as deduction, then you can't deduct these sales taxes. Okay, so out of income and sale taxes, you can only claim one. Okay, you can only claim income tax or sale tax, and limitation is up to $10,000 you can deduct in your form 1040. Okay, any property tax, any personal property tax, you can get the deduction in your form 1040 as an itemized deduction, and limit is $10,000. And if you are filing as married filing separately, then it is $5,000 per person. Okay, and you should know that if you are paying the federal income taxes, then it is not deductible. Only state and local taxes can be deductible. Okay, also self-employment taxes. For self-employment taxes, you can get the deduction as an above the line deduction. Any doubt in salt, state and local taxes?
No, ma'am.
Okay. So next is home mortgage interest and points. Okay, so if you have taken some mortgage for your home and you are paying some interest on this mortgage, then it is deductible. But the limitation is that the loan is up to the amount of $750,000. Okay, and if you have taken $750,000 of debt and it is secured by the home, means you have taken home mortgage. Okay, and also if it is only used to buy, build, or substantially improve the taxpayer home, not for other purposes, then you can claim in your form 1040. Home equity loans deductible only if they used to improve the residence. Point on home purchase deductible immediately. Point on refinance amortized. Okay. So if you are paying some interest or point in any home mortgage loan, then you can claim in your form 1040. Okay, but loan amount should be up to $750,000. Next is investment interest expense. So if you have some investment interest expense, then you can deduct in your form 1040, but the limitation is up to the amount of income from the investment. So investment interest expense, if it is there, then you can only deduct up to the amount of the investment income. Okay. Rest of the interest cannot be deductible in the 1040. Is it clear?
Yes.
Okay, next is gift to charity. So if you're doing some charitable contribution, then you can also deduct in your form 1040. Uh, Condition is that whatever is the charitable organization that should be qualified under the qualified charitable organizations. Okay, limit is if you are donating the cash, then you can deduct up to the amount of 60% of your adjusted gross income. Okay, if you are paying the cash donation, then you can deduct up to the amount of 60% of adjusted gross income. But the if you are contributing the ordinary income property, means which is for short term property, then you can claim up to the amount of 50% of AGI. It is not written in this, but if you are contributing any ordinary income property, that means the property which are usually held for short term period, then you can get the deduction up to the amount of 50% of AGI after subtracting your any cash donation. So if you have some cash donation, then you can deduct, and after deducting your cash donation, you can get the 50% of AGI. Okay. But if it is a capital gain property, that means ki if it is held for a long period, then you can get the deduction up to the amount of 30% of AGI. Also, if you have other this donation, then it will be lower of your amount, 30% of AGI or 50% of your AGI after subtracting these two values, A portion and B portion. So I am writing this as A portion and this is B. Okay, so if you are donating some cash to the charity, then you can get the deduction up to 60% of AGI. But if you are donating some ordinary income property, the property which are usually held for short period of time, then you can get the deduction up to the 50% of AGI, but after subtracting any cash donations. Okay. But if you are donating any long-term property, then the limitation is up to 30% of AGI. But if you have these two contributions also, like cash and ordinary, then the limit will be lower of these two amount. Okay, 30% of AGI or 50% of AGI after subtracting this A and B amount. Is it clear? Is it clear?
Yes.
Okay, so next is casualty and theft losses. So if you have some losses, that can be deductible only if it is a federally declared disaster. Okay, earlier you can get the deduction for any casualty losses, but now the new rule is says that you can only get the deduction if your losses is due to some federally declared disaster, like due to some natural calamities like earthquake or something else. So if it is federally declared disaster, it will be given in the question. So if it is federally declared, then only you can get the deduction. Otherwise, no deduction for any casualty and theft losses. For example, if your car get car gets stolen, or your something your house get destroyed in fire, you can't get any deduction. But if it is due to federally declared disaster, then only you can get the deduction, and the limitation is your loss value. Loss means for example, if due to fire, due to some federally declared disaster, your home catches fire, and due to which its fair market value declines. So decline in fair market value will be your loss. So whatever is your loss, you can first subtract the $100, and then the limitation will be 10% of AGI. Excess of 10% of AGI, you can get the deduction in your form 1040. So limitation is, first of all, you will subtract the $100 amount from your loss, and whatever the amount left, you can deduct excess of the 10% of AGI. Okay. Next is gambling losses. So if you have any gambling losses, you can deduct up to the amount of gambling winning. Miscellaneous deductions, these were deduction that were uh, earlier deductible, but these are not deductible, like suspended until 2026. Any tax preparation fees, safe deposit box fees. Okay. Any doubt in itemized deduction? It is important topic. You can get some questions on itemized deduction. You can get the simulation also, like your income will be given and uh, some expenses will be given. You will be asked to calculate adjusted gross income or income after subtracting itemized deduction. Any doubt? Any doubt?
No, Garima.
Okay. Casualty losses already discussed. Casualty losses means when a property is damaged or destroyed due to sudden or unexpected or unusual event like fire, flood, hurricane, tornado, or vandalism. So personal casualty losses are only deductible if it is under the federally declared disaster area. Okay. For example, fire, storm, flood, earthquake, terrorist attack. So if it is under federally declared disaster area, then only you can get the deduction. Otherwise, if it is a termite damage, mold, rot or rust, wear and tear, loss due to decrease in market value, then it will be not deductible. And limitation we already discussed. First of all, you will subtract the $100 amount for each event. Like if you have multiple losses, you should subtract from each event the $100 amount. Then, after deducting this $100, then excess of the AGI, 10% of AGI, you can get the deduction. Okay, that means after subtracting 10% of AGI, whatever is the amount left, you can get the deduction for these amounts. Okay, for example, your AGI is $80,000 and due to some federally declared disaster, decrease in fair market value is $30,000. Adjusted basis is given and insurance is given. Okay, so please note that your loss will be after the reimbursement amount. Okay, you can get the deduction for the unreimbursed amount, not the amount you can get the. If you're getting the reimbursement, then that amount will not be deductible. You can only get the deduction for the unreimbursed amount. Okay. So, for example, your loss here is $30,000 and you are getting the $10,000 of reimbursement. That means your net loss is $20,000. Okay. So, we will first deduct the $100 amount from the loss. So, your 20,000 loss, you will first deduct the $100 amount, then whatever is left, you will compare to the 10% of AGI, and excess of this 10% of AGI, you can get the deduction. Okay. Also, one more thing you need to note that if your value, your fair market value or adjusted basis is both given, then your loss amount will be limited to the a lower of these amount. Like if your decrease in fair market value is more than the adjusted basis, then your loss amount will be limited to the adjusted basis only. Okay. So here in this case, you have $30,000 decrease in fair market value, but not. This amount is greater than your adjusted basis. So you are taking your adjusted basis as a loss. Okay. $25,000 you are getting the $10,000 of reimbursement on this amount. So after deducting the reimbursement, you can get the $15,000 loss. As per rule, you should first deduct the $100 amount from each event. So here is only one event. So you can deduct the $100 amount from it. And after deducting $100 amount, this loss can be deducted only excess of 10% of AGI. Okay, so 10% of AGI means your $8,000. So excess of this amount only can be taken as deduction in your form 1040. Any doubt till here? Any doubt till here?
No. From the last step, from where did we get that amount of rupees? Eight.
Okay, I am explaining again. So for federally declared disaster, you will first take the unreimbursed amount of the loss. So how is the unreimbursed amount is calculated? So whatever is your loss, you will deduct any reimbursement. For the loss, you will compare your fair market value and the adjusted basis. So if your decrease in fair market value is lower as compared to adjusted basis, then lesser of these amount means fair market value, you will taken as loss. But if it is more than your adjusted basis, you will take your adjusted basis as the loss. So means lower of these two amount. Okay, you will deduct your reimbursement amount. Then you will get the unreimbursed losses. From unreimbursed losses, you will first deduct the $100. After deducting $100, you have $14,900 of loss. Out of this loss, you can only deduct which is excess of 10% of your AGI. So your AGI is $80,000. 10% of this amount is $8,000. So deducting $8,000 from your loss means excess of the loss, you can get the deduction in your form 1040.
Okay, ma'am, understood.
Okay, one more example. So suppose your AGI is $100,000 and your loss after insurance and $100 reduction is 7,500. So this amount is deducted only if it is excess of 10% of AGI. So on comparing this amount with the 10% of AGI, since there is no excess of amount as compared to 10% of AGI, means your loss is less than 10% of AGI limit, so you will not get any deduction on this amount. Okay, only excess value can be taken as deduction. So if your loss is lower as compared to 10% limit, then you cannot get any deduction. Okay, multiple casualties means other if at the same time multiple losses are happening, then you should apply 100% reduction per event, but only but apply only 10% AGI floor per year. Losses are combined before subtracting the 10% of AGI. So if you have multiple losses, then you will first deduct the $100 amount from each loss, then apply the 10% limit on the combined amount of losses. Okay. Okay, so if you have casualty gain, means you do not have any loss, but instead you have gain. For example, if your property is for $80,000, it get destroyed, and in from insurance amount you get the $100,000 as a reimbursement. Means your reimbursement is more than your losses. Then in this case you have some gain. So these gains are taxable amounts. It should be reported in the form 1040. But if you are purchasing the another property from this amount within within the qualified time period, then you can defer this gain. Means you will not include in this gain in your form 1040 and do not pay any tax. Instead, you are deferring this gain to the future period. Okay. So this will become in your TCP section. Business versus personal casualty loss. So if you have some business casualty loss, then business casualty loss are basically not subject to $100 reduction or the 10% AGI limit. They are fully deductible on business schedule. Okay, so if you have business related loss, you can deduct in your schedule C. Okay. Gambling losses we already discussed. If you have some gambling losses, then you can deduct up to the amount of your gambling winning. Okay, so under gambling losses, these expenses are qualified like casino. These gamblings are basically qualified: casino games, lotteries and raffles, sports betting. So you can get it as itemized deduction under Schedule A. Taxpayer must maintain detailed record including the receipt, ticket logs, and W2G forms. Okay, if you have some gambling losses and you want to take some deduction, then you need to have these receipt and all things. Okay, for example, suppose you have some gambling winnings of $9,000 but losses of $12,000. So the rule said you can deduct your losses up to the amount of income. So you can deduct only $9,000 of losses, and excess of loss is not deductible. Okay. So if you have you're winning more than your losses, then you can easily deduct your losses against this income, and excess of income will be taxable. Or if you do not have any gambling winning but instead have losses only, then you can't deduct any losses because you can deduct only up to the amount of income. But if income is $0, then you can get do not get any deduction for gambling losses. Okay, is it clear or any doubt till here? Any doubt?
No, ma'am.
Okay, so these miscellaneous item, just read it for once. These are not allowed or applicable for this year. Okay, these were earlier deducted in form 1040, but now it is suspended, means you do not get any deduction. Next is interest expense. So we already discussed. So if you have any interest related expense, you can claim in your 1040 as an itemized deduction. Okay. If you have interest expense for the home mortgage, then the limitation is that your loan should be up to the amount of $750,000. And before December 15, 2017, the limit was 1 million. Okay. This loan should be on if you are taking the deduction on this interest expense on home mortgage loan, the loan should be used for qualified purposes only. That means you should use this amount only to buy the home, or you are using this amount to build the home or doing some improvement in your home. Okay. So if you are using for other purposes, then you can't take any deduction on the interest expense. Okay. Some personal interests are not deductible. For example, if you have some credit card interest, any auto loan interest, means if you have taken any interest on personal vehicle, sorry, loan on personal vehicle and have some interest expense, you can't get any deduction. Any personal loans, any bank overdraft interest, any interest on unpaid federal or state taxes, or any form of consumer debt interest, these kind of interests usually are not deductible. Okay. But if you have any investment interest expense, then you can deduct it up to the amount of the investment income. Okay. Excess of interest expense is not deductible. Next is business interest expense. So if you have some business related loans and you are paying some interest on these loans, then these are generally deductible unless limited by the IRC. Means if you are a small organization, then no problem, you can get the deduction for the whole amount. But if you are a large organization, means if you have your average receipt greater than 29 million or 30 million, maybe for this year, then you will be subjected to some limitation, which is 30% of your adjusted taxable income. Okay. Next is student loan interest. So student loan interest we already discussed in above the line deduction. You can't get any itemized deduction on this amount. Only taken as above the line deduction up to the amount of $2,500. Any doubt in this topic? Any doubt?
No, ma'am.
No, very much.
Okay. Some examples are given. For example, if you have taken loan of $600,000 and you are paying interest of $18,000. Since the loan is below the 750,000 of limit, then you can get the whole amount as deduction. Okay, this is related to mortgage interest. Next example is related to investment interest expense. So you can deduct only to the amount of the income. So if your income is 6,500, so out of $10,000 of expense, you can get the deduction for 6,500. Next is charitable contribution. Charitable contributions, if you are paying some, if you are donating something, if you are making some contribution to the charitable organization, you can get the deduction for this amount. But the organization should be qualified charitable organization. Under qualified charitable organization, these are basically covered: public charities, government entities for public use, any certain private foundation. But if it is related to a political organization, any civic club, social club, gift to individual, like someone is directly paying, directly doing some contribution to a needy family, then this will not be classified under charitable contribution. Okay. Personal GoFundMe donations. So if someone is like making some contribution at the individual level directly to the needy person, then it will be not deductible. Okay. If you are paying to the charitable organization, then only be deductible. A limitation is, again, cash contribution is deducted up to the amount of 60% of AGI. Ordinary income property is deductible at a lesser of fair market value or basis, or rule is 50% of AGI after subtracting your cash contribution. Okay. If it is a capital gain property, means if it is held for more than 1 year, then you can get the deduction up to the amount of 30% of AGI, or 50% rule is also there, 50% of AGI after subtracting your cash and ordinary income property. So whichever is the lower amount, you can get the deduction only up to the debt amount. Excess of charitable contribution, you can carry forward it to next year also. Up to the 5 year, you can carry forward. For example, your AGI is $100,000 and you have donated $70,000 of cash. So for cash, you can get the deduction up to the amount of 60% of AGI, means up to the amount of $60,000 you can claim as deduction. Excess of these amount you can carry forward to the next year. Okay, you can carry forward for 5 years. Is it clear or any doubt? Any doubt?
Clear, ma'am.
Okay. So next example is given for capital gain property. So for capital gain property, your AGI is given, your fair market value or basis is also given. So please note, if it is a ordinary income property, then out of fair market value and basis, you will take the amount which is lower. Okay, lesser of fair market value or basis. But if it is a capital gain property, you only take the fair market value. Means you have taken you have contribution of $50,000 and your AGI is $120,000. Since you do not have any other contribution, so your limitation should be 30% of AGI. That means 36,000. So out of 50, you can deduct 36,000 as charitable contribution, and excess of these amount you can carry forward for 5 years. Next is non-deductible contribution. So if you are contributing to some political organization, then it will be not qualified for charitable contribution deduction. If you have a referral ticket, tuition payment to private school, value of volunteer time. Please note, if someone is like giving their time or services instead of any cash or property contributions, if someone is contributing their time or services, then it will be not taken as any charitable contribution deduction. Okay. Again, this is the summary. Any doubt till here?
No, Karim.
Okay. So after deducting your standard or itemized deduction, you also have one deduction for the QBID. Like if you have some qualified business income, then you can get some deduction on this amount, and deduction limit is up to the amount of 20% of your qualified business income. Okay. So basically, this deduction is basically given to encourage the business and investments. Okay. So if someone is like, if someone is working as a sole proprietor or uh, have some investment in partnership or S corporation, certain trust and estate, then income from from these entities, you can get the deduction of 20% of the qualified business income. Eligible owners are like if you are earning the income from sole proprietorship, partnership, S corporation, limited liability company, or trust and estate, only you can get the QBID for these types of income sources. But if you have some investment in C corporation, or if you are an employee and earning wage income, then it will be not eligible for this deduction. Okay. So qualified business income, you need to remember that you can get the deduction up to the amount of 20% of your income amount. So how to calculate this income? So it basically include the business profits, rental income if it is considered a business, income reduced by deductible self-employment taxes, health insurance, and retirement contributions. Okay. So qualified business income is calculated by including these and excluding capital gains and losses, dividend, any W2 income, any guaranteed payment, any S corporation reasonable compensation, any foreign source business income. So these types of income is not included in QBI. Limit is up to 20%. So if it is a specified service, trade, or business, means if it is include any profession like health, law, or accounting, consulting, financial services, non-SSTBs include engineering, architecture, manufacturing, retail, restaurant, and similar field. So if above phase out, then SSTB means specified service, trade, or business receive no deduction. Okay. So these deduction is have some phase out limit also. It will depend upon the filing status of an individual. So if someone is filing as single or married filing jointly, then depending upon their amount of income, you have some phase out limit also. Okay, so we are left with only tax calculation part and credits part. So we will discuss it tomorrow. And after that, we are basically done with the Form 1040 individual taxation.
Okay, ma'am.
Yes, so
Okay.
please revise the individual taxation unit, and if you have any doubt, you can ask in the next class.
Sure, ma'am. Okay.
Okay, then. Okay, bye then.
Bye, ma'am. Thank you, ma'am.
Bye. Thank you.